The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi, everyone. Basil Chapman sitting in for Larry. Larry's traveling, so I was able just to make a couple of changes, and I'm here. I'm here at least until the last segment of the show, so we've got about 45, 50 minutes. So here we go. We've got, in fact, the Dow up 20 at 16,737. You got the S&P up. You see the Dow's up 12.12%. The S&P is only up 0.04%, and the composite index, in fact, is down. So the S&P right now is up 80 cents at 1924.38. You've got the comp index down 6 at 42.35. This is going to be important to see what's going on. Gold is down $1.30 per old gold, and silver is up 0.05. Now, high-grade copper is down 31 cents. High-grade copper is unched at this point at 31. No, I don't think it's trading right now at that point. So high-grade copper, what do I have it at? Just looking at a different table here. It's up 0.04 at 3.167 on the index itself. So at this moment, we've got Mark in Denver. We're looking in my show, which is usually the Tiger Technicians Hour, Monday through Friday, 11 o'clock until noon. And on Monday, Larry follows me, so I'm in for Larry. And my service is the opening call. Very comprehensive look at the markets. Maybe we'll have a chance just now to look at some of the other charts out of the 12 or something charts I sent over the weekend for my subscribers to look at prior to today. I repeated them, of course, today with some others. So we've got Mark looking at, he's short the IYR, which is the U.S., the full title is the ARCS, iShares U.S. Real Estate ETF, and in fact, it's commercial real estate. Trading right now at 71.64, down 0.03. Now, one of the things I wanted to show, and the reason why I asked if Mark could hold on to go into my show, is that sometimes I just forget the stuff that I do for myself because I'm doing the show and my focus is on the caller and what they're looking at, and I just forget to open up the chart to show you how beautifully some of these particular techniques of looking at the left side high, in this case of 71.74 back in the middle of May, it pulls back to 70.29, and then it starts like a rectangle formation. It starts an upward move that goes in the Chapman wave. What you always look for are at least four successively higher peaks, and I label them peak A. 1 penny above that starts leg B, and that goes to peak B. Peak B, 1 penny above that. Once it's made as a peak, it goes to leg C. It's called the floating ladder. And now we've got the D, which is a floating D, but there's no new high above today's high of 71.85. Then it's a peak D, and then there's a long-legged doji candle, and it's giving us information there. The MACD in the 120-minute chart is still very good. Not great, but very good. The stochastics at 86%, and that is very good. Not great, but very good. Now, there's a technique that I talk about, the Chapman wave overlapping wave. In my CD introducing the Chapman wave methodology, if you had to type in, if you go to view, and then you go type in search, and you type in overlapping wave, what it'll take you to is right here, and this is a CD book that's only available at TFNN. Takes you to everything that's involved in the overlapping wave. And let's see now, can I go there? I think I skipped something. There's an overlapping wave. That explains it exactly. And what happens is if you go to a peak A and then a B, or maybe sometimes it's usually a C, but if you go to that B and then you pull back, and then you start another little mini move on the upside, A to B, and then you break it, the previous high together with the same letter name, in this case C, the example case on slide 226, this is bonds in this case at 104, way back in 2003. That starts a very powerful move that should take you to at least a D. Well, look what happened here. You got peak A, peak B, pulls back, gives you another little peak A, peak B in the IBR 20-minute, and then whoop, it goes to peak C, pulls back, and today you've got your very strong leg D, possibly a peak D, and it's also left side, look at that, left side, right side, price time match, which hit the 71.66 area, just 8 cents off, right there at 11:30 on the 20th. Is that the 20th or is that the 30th? That's the 30th of May. Yeah, of course it was the 30th of May. And so these techniques are just beautiful techniques that you can use. So I want you to say it's accomplished everything that it needs to accomplish. Can it go higher? Of course it can go higher. Can it go lower? Of course it can go lower. Now what we have to look at is which one predominates right now, which trend. So we go to the, so Mark, you're in a short position. You're in kind of a serious one because it's 300%, which should move very quickly. Right off the bat, what I'm going to say to you is that if the IYR, even though it could reverse afterwards, if it gets to about the 72.23 area, I'd say to you, take something off that position, just right off the bat. Why? Because then you might start to see the MACD start to cross positive. So let me just double check two things here. So what stop would you have had on your position?
Oh, I usually like to give myself about a 10%. So.
Oh, okay. So then, okay, that's fine. I'll tell you why 10% would be reasonable. So 10% on your position, or 10%, that would be 3% on the price itself.
On the price itself, 10% on the price itself. So I'm in at like 38. Was it 38.90-ish? And so
give me the symbol again. I typed it in. Of course, I've already forgotten it. It's the
ERV as in Virginia.
ERV.
What? D as in dog, R as in Robert, V as in Virginia. Although that's not the correct terminology.
Like drip. Got it. Okay. You know, I don't think I've ever actually even looked at that. I always look at another one in
the
particular.
SRS, right?
Yeah. So, okay, this is a 39.14. It's made the, patterns repeat. They're fractals of like human nature. As we repeat things over and over and over and over, so patterns repeat. And what I've seen lately is that the H, the lowercase h, let me just do this for some people who might not have heard me before, and I'm doing Larry's show. In the pattern that I call the lower H, chapter 17, 332, I think it is, chapter 17, right there. This particular pattern, I've seen it so many times lately, where you've been on the way down and it makes the little scallops or the arches to the downside, and at some point you have a very powerful, you either get the H to an M pattern, or you get something even more powerful, and that is the H that powers higher, breaks above the previous arch high. So now let's just imagine for a minute that there is a chance that the IYR is not going to go higher. It's going to meet a lot of resistance here, and it's going to pull back. It doesn't say much just yet, but what it would say is that if the IYR at 71.63 pulls back and closes in the next 2 to maybe 3 days, if it closes under 71, I'd probably say under that candle there, 70.81. If it closes under 70.81, then your RV has made a pattern that has gone 38.93, 38.90, has broken below. Now, let me talk about this pattern. I'll draw it in right here. In the pattern that I used to call the dreaded H, now I'm more likely to call it the lowercase h pattern, if the price takes out the left side low bar of importance, that's the bar of the 13th of May at 38.93, 38.93, and that is the 513. If it takes it out, it has the very bar that goes underneath that level to maybe 1, maximum 2 bars to not just bounce back, but to bounce back strongly enough that it starts to move to take out the first left side high bar of importance. And in this case, it would say that the DRV, the direction shares, and in fact, go to the front page of TFNN, you'll be able to read about these directional shares. Normally, I say that the 300 percenters, You've got to have a powerful move in that direction to be able to buy and hold and forget about it. The ones that work best are the one-to-one, like the DOG for the Dow, which is 1 times bear, or SH for the S&P, for the SPA. The 2 times the DXD or the SDS, they work okay as long as the direction is fairly powerful. But the moment you get meandering in the SRS 200 times 200% short, the IYR or the DRV 300% short, the moment you get meandering, it just doesn't go anywhere. In fact, you can see the price go quietly higher, quietly in the direction you want. Let's just say lower in your case for the IYR. This thing might not participate successfully at the end of the day. So you need 39.83 really quickly, and that'll be, I'd say quickly, I mean talking about Wednesday afternoon, and by Thursday you want to be tackling 40.69. If that occurs, I think you've identified within fractions at least a fabulous short-term low potential spike that if it takes out this week, if it takes out 40.69 by sometime by mid-June, early June I'd say, the 41.53 high of the 15th of May will become a target. If it takes that out, then what you're looking at is the candle of the 7th of May that went from the open of 42.13, which is also the high, to the low of 40.45. That red candle becomes your target candle. And at that point, you absolutely need to be thinking about taking something off, because that's where it could either start to fail. IYR could come on strong again. But that would be your 3 targets. I'll give you the numbers. It must, well, 4 targets. First of all, it must not, I know you're talking about 10%, but I'm telling you that if the DRV closes under 37, no, if it closes under 32.20, you've got to be somewhat careful, because you might get a bounce, but that bounce is going to have to do some retesting as well. On the upside, a close above, a break above 40.69, preferably a close, but a break above 40.69 immediately sets up 41.28 as an upside target. So I think you've got those are parameters for me that would be very, very clear. I didn't have the courage today to do what I was wanting to do. No, I wouldn't say I didn't have the courage. I could have done it. I wanted to implement my plan just one step at a time, because that's the order that I'm looking at now. If this is an orderly, quiet pullback with nobody saying anything, everybody's looking up. Anytime all the stuff is looking, you should be looking at the ground, because you should be looking down. That's the kind of move that's the only move that can start to see the VIX climb quietly and steadily with nobody really talking about it. And that's really what you want. And then out of the blue, in about 4 sessions or 5 sessions, people say, hey, the market's been going down, and then it accelerates. Hope that helps you.
Yes, thank you.
Thank you for calling, Mark, and good luck and good eye.
Thanks.
Folks, we'll be back. Basil Chapman sitting in for Larry Pesavento. Great call, Larry, on bonds. We'll talk about that in a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Basil Chapman sitting for Larry Pesavento, and my service is the opening call. Check it out, front page of TFNN, 2 weeks free. This is a perfect time for it because we're starting to set up some new positions, having taken out profits in the QQQ series. Well, we had the TQQQ, and we took almost a 10% gain from the 21st of May. On Friday, we got stopped out, raised the stop. And I'm just showing you my technique here. This is the Chapman wave methodology. Identify the lowest low bar, start a wave count, should take you to at least a D. If it goes high, it can go to an E or an F. That's when you've got to be real careful, and look what happened. Goes to an F in the 2-minute chart of the E-minis, the June E-minis, pulls back, and now it's turning this green line right here into some area. If it takes it out, that'll become a resistance. MACD is very weak. Stochastic's trying to bounce, and it's had a high-level consolidation thus. You look at if you were just looking at these technicals, I would have said that whatever you were following had a huge pullback. And in fact, what happened is this is at a modest pullback, so the price is stronger. And that says on the next bounce in the technicals, you see a price above the previous high. Otherwise, when it pulls back, it becomes somewhat. So that's the technique, same technique that we're going to use when I'm showing you now. BRK.B. Now, I know some of you have had your Berkshire Hathaway stocks and you don't intend ever selling them. And that's been the right thing. And let me explain why. Because Buffett has been probably one of the premier company buyers. He does have the stock, obviously, but there are many companies that he buys that are not public companies. He has a portfolio of companies as well as a portfolio of stocks of companies that he would like to own. And what's really important about this is that this is a person that needs to get right three factors. He needs to get right the timing of his entrances. He needs to get right that either that the trend, which is usually what he's looking at, an uptrend, is going to continue. And number three, in his very long-term perspective, because he doesn't sell very much, he has to be right in the sense that he is buying a stock, he's buying a company, and he's buying the manager, the CEO, he's buying the person that created that company. That is the goodwill that he's buying. And Berkshire Hathaway just has, I mean, look at this, all-time highs. The all-time high was in May at 129.73. It's trading at 127.66. Not even an eye blink away from that. But it is a peak E, and you get in the M pattern in the MACD, and the stochastic is very good at 95%, but it's in the extended part of its longer-term move above 80%, which started a year ago exactly. 2 years ago. No, last year was 13, right? 2013? Yeah, a year ago. And the on-balance volume is the hint, and the RSI is that it is becoming overbought. Well, if this is leg E, after that, so many of these Chapman wave stalk leg formations, this is the leg, this is the body, this is the neck, and you're starting to form the head. I could not explain how to complement my work other than with chart formations, but not with the notation when there was that big spike. It was a news-related spike back in the week of the 7th of March, and Berkshire Hathaway went from a sideways consolidation between 110 and probably about 119 for so long, for months. Now, out of the blue, it spikes higher a week of the 7th of March, and it goes to 122.92, and I said that's an A, because I'm not sure even if it's a C, you should still get a D. I didn't know how to call it. So I gave it a gray A. Then it went even higher, went to a B, and now it's hanging around here. And everything about this chart says, look, you could draw a rectangle formation here, and within the weekly chart, you could get a daily peak A, B, C, D. And that's exactly what's happening here. And that's why I'm saying that this is such an important week, because normally in this pattern after peak F in the daily, you would expect a sharp move back that bounces back towards the middle or higher than the middle of the distance between 129.73, that peak F top, 129.73, and the most recent low of 123, what was it, 124.06. 124.06. You would expect that it just makes this rectangle formation, climbs very slowly to or at or just above the previous high and goes to a D. But if this is leg C, it means that we won't some kind of a top, even in Berkshire Hathaway, until it makes D, which could be later in the week. And it can't happen until the earliest would be Thursday. So I'll talk a little bit more about timing and what we're looking at and why we're looking at it. Basil Chapman, this is Larry Pesavento. Trade what you see, and I will do that.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. And, I had a couple of questions to the break with some emails. Here we are. JP Morgan, can you do a wave count? So, first of all, the XLF, which is the S&P Select Financial Spider Fund, has done exactly what I was talking about with Berkshire Hathaway. It went to a peak, formed a strong gap-up candle, and then it pulled back and had an inside buy, a Chapman wave inside buy mode. They went to ABC, and now it's either making a D in the 120-minute, or if it takes out 2234, it extends leg D in that rectangle formation. It goes toward, right at, or just above, and then it pulls back. That's the inside buy mode. That's the technique. In the daily, we've got an even larger one, because it's got this rectangle formation. It's been in for ages. The moment the XLF, it breaks above 2265, that was the 21st of March high. If it goes into the 23s in June, that should hold up the market. That should be a positive. If it starts to fade, it could just go back into the trading range, back to the 21s, and hang out. So now let's look at JP Morgan, JPM. JP Morgan, leg A up, actually peak A in a bounce. This is that pattern that I spoke about before. You remember the Chapman wave, H becomes an M, so it became an H. Let me draw it in so you know exactly what I'm talking about. There it is. There's your first H, and it's a scale up because it breaks the left side, low support, and it goes to another one. Makes another lowercase, always lowercase h and lowercase m when I'm talking about them in this pattern. And it's a soft W formation on the way up. And now all of a sudden you get the larger potential M. And that's what I think it is right now. I won't know because if the XLF, which is trading at, JP Morgan, which is trading at 55.44, down 13 cents, takes out this whole series cluster high formation in the 56.30s, and it's at 55.44, so 90 cents high. If it goes $1 higher, that says it's going to fill the gap, go to the low of 57.38, which was the gap low of the 10th of April before it plunged the following day with a high of 56.04. So that's the area, and this gap area, in fact, you would reasonably think that the gap area is trying to be filled slowly but surely. So yes, it could go a little higher. The MACD is good, stochastic's good, but it's not the best stock in the bank. I mean, the WC, Wells Fargo, WFC. That's stupendous. Look at this. JP Morgan, peak D in the weekly, peak F in the monthly. It's having a tough time. Now, what's interesting, if you go to WFC, you didn't ask me about this, but I'm going to do it. WFC is at all-time highs. Did it today. All-time high. Leg D. Leg D in the weekly. Leg F in the monthly. This is saying we're getting a little toppy, but until Wells Fargo actually breaks down, instead of being in 51.04, up 26 cents, starts to trade consecutively for about 3 to 4 days in the 49.70 to 49.50 area, which I suspect it can do that within about a week or two if the stochastic at 88% starts to go to 78, 76%. That's what I'd expect. So Wells Fargo is the stronger one out of the two. You didn't ask, but I'm just giving it to you. Then the question was somewhere around there. Oh, that's right. So the question I had over the weekend was about the volatility index. So in my comprehensive report that I did starting over the weekend, I did a bunch of stuff. I wonder if I can find it here. There it is. I did a lot of work. You can see, what a weekend of typing away. This is the volatility index. And at 11.36, the most recent low last week, it is in the area of the 11s where you've had some very strong rallies. That's number one. Number two, you see that green line there? You see there's a rhythm that keeps bouncing off it. We've extended that rhythm. So something different could happen here. That means we could break into the 10s. I just don't know if we could hold 10s. We might touch it. I just don't see us. 11.20, 11.05, I think would be the limit right now to the downside. No, I could be wrong because the 9-period moving average is going sharply low. It's that black line there, the weekly chart. We'll see. But the stochastic is flat at 4%, which is not very positive, but it is in the area where you could get a bounce. And the MACD is very ugly in the weekly chart of the VIX index, the volatility index. It is that arch pattern that I spoke about earlier on with Mark when we were looking at the IYR, and he was looking at the DVR, which had made that arch that makes the lowercase h pattern. That's what I'm following closely in the monthly. Well, let's go to our next caller. We've got Greg in Portland, Oregon. Greg, how are you?
Pretty good, Basil. How are you doing?
I'm well, thank you. You'd like to look at...
I was looking at Maxwell.
Okay. So Maxwell is called Maxwell Technologies, and I can't remember exactly what they did. I used to have this all notated. It's gone now, but at least I've got the latest peak A and peak B. This is leg B in the monthly, all-time high for this stock. I remember when Dave White introduced us all to this stock. We had never heard about it. Most of us had, even though it's been around. Actually, I'd heard of it, but I never really followed it. And he introduced us to it, and it was way down in the single digits, the low single digits. And it's low. Let me see if I'm going to squash this chart so we get a nice perspective. Yeah, its low was at $2.60 back in October of 1987. That was the month of the crash of 87. Some of us remember it well. Then it went on to a powerful A, B, C, D. I think this made an E or an F at the final high back in December of 1998. Plunged, came all the way back down to it was back in the 4s, right? Yep, 405 back in September of 2002. And it went to a peak A, B, C, D, E in the monthly, plunges down to the 4s again. Yep, 408. Wow, isn't that amazing? It loves the 4s. And then starts up again and it is now having once again gone into the fours, this time 492 area, 490, 492. It's trading at $16.92, trying to go back. Now, what's fascinating, if I draw a very long rectangle formation, you will see that this stock hates being down in the fours. It loves testing the highs in the 18 to 20 area, and right now it's at 16.92, down 44 cents, having just made 18 something or other. And I'm going to ask you, what are you doing?
Well, I have a position, a very small, it's really a half of a position.
Is this a position that's left that you had once before you've taken some off?
Yes. So I bought back in November at 787.
Ooh, nice.
And then I showed on that big candle, and it had a lot of volume, which was on the 3rd. I had that at peak C, and then going to a peak D on 318, which is where I took half my position off. And now I've just been...
Oh, wait, okay, I've got it. Okay, all right. So actually you got out at a very opportune moment, because it certainly pulled back all the way to the 1219 area, a week of the 27th of February. Of March, sorry.
And I didn't get back in, which is what I wanted to add a full position on the pullback, but I just missed it. So now I've been kind of watching. I'm still holding the half a position, which I look at as long-term, and I'm trading that more off of the monthly. But
with
on
the
the daily, I was
expectation.
interested in your chart.
So you're saying with the monthly, but behind your words, there's the implication that because it's in leg B in the monthly that you think it's going to go higher.
Well, eventually I think it is. So my stop on that small portion is down at like 12.
Okay, I understand. All right.
And so then what I wanted, as it was coming back and testing that, I was watching it, and I went, and I just didn't pull the trigger to buy it again. Or to add to it, and
that it was a very difficult, because every time you wanted to do it, it kept pulling back under the 9-period moving average quite sharply. So yeah. I understand exactly, and every time it moved up, it almost like gapped up. So if you weren't in it, you just kind of threw up your hands and said, "Oh no."
Then I go back and look at what I still have on and go, okay, well, it's okay because I still have something there.
You have to look at it that way. It's not that you want to make something positive out of something negative. This is only positive. The negative is more in your mind, because your portfolio doesn't know that you were going to get back in. It just knows that you are in, and you're doing very well, even though it's a small portion. So I've written down here Maxwell at 15.69, 318 at 11:20 a.m. Unfortunately, I never put the rest of the date, which is the year. So I don't know when this is. 3:15. I got to think it was in this whole cluster over here. So someone had called in, and once again, I know this is a stock that Dave White introduced us to, and Terry and the Den got this whole thing about them being in transportation, industrial, information technology, microelectronic products, space and satellite applications. They are in whatever it needs to be, and they are there. That's great. So, and I'm not sure. I was going to say, I'm going to give you an analysis. I'm also going to make a suggestion that you give Dave White a call, because this is something that he's followed really closely. I don't know what his position is right now, but he'll be able to give you the skinny on their product viability in this particular market, which is really his expertise. So I'm just saying, it says here, Maxwell at 1562 on the 18th of March. I got a feeling it was this year. And I typed in, if long, I would take a little off, since it is in leg E daily, 120 minutes, still good. Weekly leg D, monthly only leg B, can add back at 1420 to 1380s if that holds on a sudden slide. And actually the last sudden slide back in April was to 1392. Wow, I should have read that. What a perfect entry. But I didn't read that. I just saw it now for the first time. Okay, I got an E in the daily. My eye is saying that it might go a little higher, but there's a really good chance that you'll get it back in the low 14s at some point in June. Now, would I step in the 14s in June? A lot depends, because this makes such big whippy moves on the shorter term, but the monthly is just steadily gone from higher highs to higher lows. Here's my recommendation. You've got your core position in at about 13-something?
No, the core is at 7.
Oh, right, of course. The core's at 7. I'm going to suggest that core, because it's in B in the monthly, I don't know if it's just a retracement failure mode, and I won't. I'm going to say, based on the chance that instead of it being ABC, new leg C in the monthly, it'd be F. So I'm putting F/C, which says that the next point is going to be very important, up or down, F/C, not Y. If it's a point below 1690, 1574, it'll have to be 1.5. A 1.5 lower, it goes under the line EMA, and that puts an upside limit, at least for this particular phase. If it breaks the previous high of last week and goes above 18.43, folks, we're looking at MXWL, Maxwell Technologies, trading 1690. If it does that, I'm going to suggest, yeah, this is very difficult for me. I don't want to steer you wrong because you've got such a nice core position. I'm going to say have a little patience. Let's look at it in 3 days' time, around about Thursday. And if this is trading at 1810, between 1810 and 1780, I'm going to advise one thing. And if it's trading below 1640 to 1620, I'll advise something else. But at this particular point, I wouldn't do anything. I'd have to wait for those levels to be reached.
Okay.
I'm going to put it on my list, and I'm going to put it right down here. I'll write it in. Thursday, look at MXWL. That's the only thing I can do now. I don't want to steer you wrong by saying it's a buy because it's going to retest the highs. I don't have that information right now. And I don't want to say it's a short because I think it's going to go test the $15.50, $15, which my eye says is probably likely. I don't want to jump the gun. I'm just going to say, let's step aside. We'll look at it together in a few days' time. I hope that's sufficient for you, Greg.
Yeah, that helps a lot. And, in fact, it helps me with the wave count because you started a new count after what I had as a D.
Yes, I did.
Right after that, you started a new
an inside
a new
one,
A
yes.
at that, and I hadn't done that. So seeing and that's why I was calling because I didn't think it was in a daily G, but it would have been if you didn't start that wave count again. And that was where I was focusing on that, and I was going, I think I should have, but I wasn't sure. So anyways, that helps a lot.
Okay, good. And the other thing is that the MACD is still good, and the stochastic's at 89%. That's why I'd like to see it consolidate for about 4 or 5 weeks, and then I would love to see it start leg C up, and then D in the monthly chart. So let's look at it together. If you don't mind, we'll do that in a few days' time.
Sounds great. Thanks, Basil.
Thank you very much for calling. So, folks, we're just about to wrap up. Basil Chapman sitting in for Larry Pesavento. I'll be back tomorrow. My normal time is 11 o'clock a.m. Eastern Time. And it's my opening call. Check it out, front page of TFNN. And just watch Dow at this point and watch the VIX. The VIX climbs by a point in the next 2-3 days. The market's coming down. So far, it's holding steady, but I've got my signals crashing at this point. I'll be back tomorrow. Thank you.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.